Let's take a quick look at the market. It's always very kind when we have Senior Portfolio Manager at Sanlam, Kunze, joining us this morning. Hello, Nick. Good to have you back with us. Let's talk JSE, the closeout yesterday as well. I imagine a lot of attention what's happening with Israel and Palestine at the moment. Are we seeing any economic fallout yet?
Morning, Gareth. Thanks for having me. Are we seeing a fallout? Actually, not too bad. Besides, I mean, the oil price was elevated the last few days, but it came back a little bit yesterday. You know, you actually look at the performance of the JSE and global shares over the last 24 hours. There seems to be a little bit of a decent sort of bounce back as we all try to dissect, you know, what's been happening since the events of the weekend.
Can we focus on the Brent crude price for a moment? Brent, we have it on screen at the moment. 87.86 is our latest update. I see it's down just over 0.25% as well. Why are we seeing such a slow return to normality for that oil price? Because it wasn't too long ago we were hovering around the 94, 95 mark.
Yeah, exactly right. I mean, and talks obviously of going towards 100 from every investment analyst out there. You know, what has transpired over the last, I guess, a couple of weeks is the possibility that, you know, the world is certainly slowing down. The world economies are sort of grappling with this really high interest rates and the speed of the central bank's interest rate rises, which has led to a slowdown in the economy. And of course, don't forget that the China factor too. The Chinese economy also struggling with a bucket load of debt over there too. So, you know, the oil price itself has been, I guess, artificially held up by OPEC and by those production cuts by the OPEC Plus team. Nevertheless, you've got that on one side, and you've got you know, obviously the events of the Gulf on the other side. Bottom line is we're sitting around about 85. Doesn't sound cheap, but, you know, still $10 from where we were.
Yeah, it's certainly not cheap. Let's not fool ourselves at all, but you're quite a way off from where we were not too long ago. Companies, let's talk Sappi for a moment. Obviously, huge paper mill company. I think everyone knows the name Sappi. But I see there could be changes there, maybe even closing one of their Belgium-based mills. That's a big move for Sappi.
Yeah, change is coming to that paper industry. I mean, the two biggest players, both household names here in South Africa, Sappi and Mondi, but two very different sides of the spectrum, where Mondi plays a little bit in the more in the packaging space. Sappi, well known for their high glossy paper. You've probably all got it in the newsroom there on the photocopy machine. We all use it, but as the world uses less and less of this high-end glossy paper, there's going to have to be some changes. And Sappi announcing, I think, a little bit long overdue, though, you know, cutting some of those expenses, closing one of their largest plants as well, and trying to ratchet back, you know, the prices as the price of that high glossy paper has actually dropped. So, yeah, I think listening to shareholders, it has been on the cards for a while.
All right, so I think all the Sappi investors and the shareholders are going to be watching that stock very, very closely today. Let's talk properties for a moment as well. And when you have a company such as Equities Property Fund, it's huge in South Africa, huge over in the UK, but having problems with their balance sheet. What's happening with Equities Property Fund? Is this concerning for someone like you?
I think it's overly concerning, Gareth, but I mean, they're also in the same space as all the other property players, where they are coming out of the COVID lockdowns, unique situations. Where Equities is slightly different is they play a bit more what they call the smart logistic place, a little bit more on the, you know, closer end logistics and warehousing as opposed to the office rentals and the like. But they did come back with a dividend payment, though it was 20-odd% lower than last time. So cash flow not too much of a problem. But again, you know, like all the South African companies highlighting, you know, solar power panel costing, putting on the rooftops, energy situations, you know, not just unique to the likes of Equities. But yeah, I mean, down 25% year to date. The stock a little bit outperformer compared to others, but I think a lot of work to be done in that space.
And quite right. Thanks for the correction as well. I said Equities because we're talking markets. Equities. I'm sorry, I mispronounced the name. Nick, thanks for that. Samsung's numbers. This is not looking good for them at all. They're expected to be plunging nearly 80% in Q3. That's a nightmare for a company of that size. What's going on there?
Yeah, frightening numbers. What's happening there is a slowdown again. The world economy is slowing down, and I guess the euphoria that we saw in AI around the world and the rush to develop these next generation chips certainly not taking up as much as we thought. Look, the warning signs were there. Apple suppliers a couple of months ago, Foxconn also hinting that this demand for AI, as much as it is getting a push, it's certainly not as the euphoria is just not quite there. But Samsung, big knock on those numbers. Interesting to note, just Gareth, the stock not really down that much. I think one of those cases where it's already in the price.
And just as we say goodbye, and as far as company business is concerned, I'm going to ask the team just to bring up currencies for us for a second. Nick, if you don't mind, let's just talk quickly about the dollar. Team, let's bring up those currencies for a second. I know we spoke oil. Dollar as we have it at the moment, Rob, it's our latest update. Dollar 19.04, euro 20.19, and the pound 23.40. Expectation, we could see the dollar below 19. What's the sentiment there, do you think?
Yeah, unfortunately, we're happy that it's under 19. I'd be happy if it was 16, but we're completely at the liberty to what the dollar does and the Fed does. And this week, incidentally, Gareth, quite a big one. We've got CPI numbers today out the States. We've got US earnings season kicking off on Friday. That's going to give a direction to what the greenback does. It was worth noting, with this risk on, a little bit of subsiding, a little bit of jumping back into the markets, the rand is a main beneficiary. So really strong move, not showing on your screens, but almost 1.5% strength in the rand yesterday, which is welcome. So unfortunately, a bit of a liberty to what the dollar does. But I wouldn't be surprised with this the rand maybe ticking back towards sort of 1850 level.
All right. Well, until next time, Nick, it's always great to have you with us, making sense of what's happening for us lay people. So always good to have Nick Kunze, Senior Portfolio Manager from Sanlam, joining us this morning.